Hi guys, this is Annie. It has been a while since the last time I recorded a video. I hope everyone playing their part, staying at home, and I also pray for those people that work in the hospital and also people that being sick, ill because of the COVID virus. Now, um, I I think most of you already know that the Bank Negara did release the loan deferment stuff, which we call the moratorium on repayment, payment of loans, and financing. This is something that will be um, enforced in April. But some of you, because we are like five days away to into April, right? So I think it's good that we bring this up and discuss what's the implication of this so-called loan deferment. Now, this is the thing. As usual, disclaimer, um, whichever the thing that I'm going to share is purely for education and information only. You should not take whichever that I'm going to share as a professional advice. So if you need any professional advice, you need to go to your banker or go to your financial advisor to get the proper advice. Anything that you're going to do, proceed at your own risk. All right. So this is just purely for education purposes. All right. Now, so what is a moratorium on repayment, payment of loans, and financing? Now, Bank Negara released a letter to all the banks of financial institution. Now, it's actually additional measure to assist borrowers customer affected by the COVID-19 outbreak, right? So just a summary, the point, the most important point in the letter is this. Now, the Bank Negara urged the bank to defer the payments of loans for the customers, right? For their customers. Basically, most of us who got loan anyway, right? This could be the SME, it could be the individual level, and then everyone will have the to get the loan repayment deferred for 6 months, right? I will get into more details, right? So up until starting from 1st of April 2020, 6 months, right? So why the bank is doing all this? Primarily this to help people with a financial burden. For example, the people that are unable to work due to COVID-19, those that tested positive, now they cannot work, they're in the hospital, quarantine for 14 days minimum, or maybe if they're positive, they need to do treatment even more, right? So that's for them. And also for the people that are unable to work due to movement control order MCO, right? And especially today we receive um, the message from the PM that it will extend it into May. No, sorry, in April, right? And that those that running business, they obtain SME loans. So these are the measure to assist to at least ease the burden of the riot. Okay. So how this loan deferment works, right? By default, all loans will be automatically deferred for 6 months starting from April 2020, right? And then the maximum deferment is 6 months. If you need to increase for more than 6 months, then you need to talk with the individual bank. But by default, it's only 6 months, right? So the deferment won't affect your secrets because this is by the Bank Negara. Whichever the deferment that the bank is giving you, it won't be reflected in the secrets. For example, like restructuring, or maybe like late payment. No, it's not something like that because this is we're dealing with more serious stuff here. So the bank know about this. They're not supposed to put any record in secrets for flagging, right? So and then there should be no late payment charges incurred during these 6 months. So basically, if you all the loans, if you deferred for 6 months, then it won't be reflecting the secrets for non-payment or maybe deferment. so it won't even reflect, right? So all the banks, which bank did you ask is going to involve in all in this deferment, right? It's all the banks, any banks that regulated or licensed by Bank Negara Malaysia, right? And the last one is now, because if you look into this, is the deferment is automatically applied to all the loans, right? But if you don't want it, you have to tell the bank that you want to opt out from this loan deferment. Otherwise, they will automatically put you in the deferment program, right? And it's like today's 20, how many days? 25th. So you have like 5 days, 5 days in order to let the bank know if you want to opt out from this, right? So what should you be aware of this loan deferment thing, right? Okay, for conventional loans, the interest will continue to be charged, and outstanding balance comprised of both principal and interest portion compounded during the moratorium period. Now, this is something that we really, as a loan borrower, we really need to know what's the pro and cons to this, right? As for Islamic, because Islamic they don't use interest, they use a profit, right? The profit will accrue to the outstanding principal amount, because in Sharia for the Islamic loan they cannot compound the interest. They can only can only compound on the profit but not the interest. So it won't be so significant here, but at least you know a little bit on what's the pro and cons, right? Okay, and this one say also the bank will not charge any late payment charges that deferred for 6 months, right? So example, a quick example into this is that assuming that we bought the property for 550, right? So the loan margin is 90% and the mortgage rate is 4.32. Yes, I know now it's going less than 4, right? But because of the rate, it's not the rate OPR that reduced is not going forever. It's like for the past like 20 to 30 years, the longest maybe like 6 months, 8 months, it won't be so long. So anything below the 4.3 as a benchmark, because on average it's 4.3 for the past 20 to 30 years, right? Anything below, we treat it as a bonus, right? Otherwise, we stick to 4.32 as a baseline, all right? So the tenure on average, we're talking about the 30 years. Installment, wrong spelling here, it's okay, forgive me, right? For installment will be 2004 around. So assuming the property that we bought in January 2016, now this is the by today, next month, so by now 2004 is your installment. Now because it's already 51 months, this month is a 50-month once, it's already 4 years, right? Your loan, 90% loan is like 490 plus, right? So the balance loan for this month will be like 457k, right? But if you continue to pay as usual, all right, if you assuming that we pay as usual, in October 2020, you will have balance loan of around 451, right? This is if you keep on paying the installments as usual, right? Now, this is something for borrowers to take note. If you, the Bank Negara already said that you can defer not paying the installment for the next 6 months, but the interest will be compounded on your loan, right? So what this is telling us now, if you look into the yeah, I already calculated this anyway. All right, so if you look into this, I'm not sure if you can capture see my cursor. Now this is the simplified version. The actual calculation would not be like this. It would be, I think it should be more than this, because I do the easy calculation one for better understanding. You know, we just need to understand the basics and need to understand the concept. We don't need to dig into the real numbers, because we are not specialists. We don't need to know the details. We just need to know, understand the concept, right? So imagine that you're not paying for the principal. This is a principal. You're not paying for the principal, but then again, you are accumulating because you're not paying in the interest. The installment is actually comprised of the principal and interest. But you do know that at the beginning of the loan, you're paying like maybe by 5 to 10%. The amount that you pay, 5 to 10% goes to the principal. Now then 70 to 90% goes to the interest, right? You know this by now. I think I shared a few videos about this. Now, so because this is the fourth year, only fourth year, so the majority of the interest of the installment goes to the interest. Well, if you look here, right, on the March, I'm paying for 2004 for the installment, but only 800 goes to the principal, where else 1006 is go to the interest. Now, here's is the catch. Assuming if you not paying any principal, not paying any installment, so therefore there's no money paid into principal, so they will calculate based on the balance loan 457 53 this one, and they add in the interest, whichever the interest, assuming it's a 4.32, now is less like 3 or 4%, but assuming that we go it flat on average 4.32. Now if we put it 4.32, that gives you 1006 from 457. You add in the interest for non-payment into the balance loan, because you're not paying, they're not receiving anything. So the only thing is that they need to credit into your debit into your loan. So when they put into your loan, if you notice the loan sum will increase 49459, right? And then every month on the May to 460, June to 462, July 464, because it's every month is increasing the interest on the interest. You know, the balance loan that they they include the interest from there, from A plus B, and then you times another the interest rate, and therefore you get the new amount. And this is the compounding effect of this, right? With this, by October 2020, your loan from 457 will become 466k, right? Assuming that the compounded interest, this is compounded interest, right? This is if you keep on paying your interest, installment for the next 6 months. So the difference is 14k. Now, how is this 14k reflect to your loan? Now, the next slide is going to tell you. This is what's going to happen, right? Assuming this is a basic calculation. This is amortization schedule. This is a normal thing. So we don't dig into the details so long we get the concept right. You are having like, if you going for this deferred loan deferment, the bank is legally to charge you interest on your balance loan. So therefore it's a principal, and therefore you ended up in October with 466k. Now 466k, what is this going to translate? Now if you look into the year 3 on the month of 40, right, the balance loan is 466. Now what is telling us is that if you deferred this loan for 6 months, if you the you will bring your loan back to last year, right? Back to last year in April 2019. Now you will lose out another year because you like reset back to 1 year. So this is the effect of compounding, right? You paying every installments and suddenly stop for 6 months. This is what's gonna happen. Now the calculation might be off a little bit, but it wouldn't be far off, right? So what's the impact? The impact is that the loan tenure unlikely to extend because, like I said, on average we're talking about 30 years, right? The loan tenure unlikely to extend as that will involve amendment in security documents, loan agreements, or maybe supplemental agreements. I think that's a lot of hassle. I don't think the bank will do it because if you were to do it, it means it incur costs on the legal fees and everything. So unlikely. But what they can do is that in all the loan agreement or loan offer letter, there's always the bank has a right to revise their loan installments, right? So one other thing that I can see that's likely to happen is that the installment in October 2020, due to the amortization and of the loan tenure fixed at 30 years, you will see the increment of the installments, right, in October 2020, right? And even like I said, the OPR won't stay low for forever because on average we're talking about 4.3, like a mortgage rate on average we're talking about 4.3, right? So you will see the increase when the OPR increase next year, assuming the economy is recovering next year. So you will see the installment become much higher in 2021, right? Not only your loan is pushed back to the year before 2019, and also in 2021 your installment will increase much higher. So this is the thing that as an investors or as a homeowners, as a mortgage borrower, we need to know why we should take this loan deferment, right? So what next? So if you're having financial constraint, please consider to accept the loan deferment, because if you don't take this, you will default on your loan, and even worse, if you default on your loan, the bank has the right to default to impose a default rate, which means from maybe 2 times. For example, if your effective rate is a 4.32, they can impose to 10%, 9% on 10%. That even worse, right? If you're really having a financial difficulty or maybe constraint, please take this. Now, if you take this, basically don't need to do anything. The bank will just opt you in automatically. But if your investors, if you're able to keep up with the payment up to date, please contact your bank to opt out from this loan deferment. Because from my calculation, although I'm not a financial advisor, my numbers will be off a little bit, but it won't be far off, right? So for investors or people that are able to keep up with their loan repayment, opt out from this loan deferment, because it will bring your installment not only higher, but also bring back your payment back 1 year to the previous year. So this is something we should tell all the people to, because if you don't look into the numbers, you wouldn't know what's the implication of all this, right? And also the above for the moratorium on the payment of loans includes the credit card and hire purchase car loans, right? All these things. But because I'm a property guy, so I'm not going to talk about the credit card, because credit card, you look into the letter, credit card, they will do something like convert into loans, short-term loans for not more than 3 years, and with the rate not more than 13% per annum, I think something like that. And hire purchase is not something I'm familiar with, so I don't want to touch that. But you guys can look into this. Do call your bank to find out more whether or not you want to stay or you want to opt out for this loan deferment. And lastly, provided you're not default on your current loan, if you default, then there's a different case to handle with, right? This is applicable to those people that keep up with their payment, but it's just that they need a little bit of the um, space or time to plan their financials, right? Right. This is the end of my sharing. I hope you guys learned something from this. And if you haven't signed up as the followers or for Rapid Property Connect, please do like this video and also like our page. And we have um, Instagram, and do follow me on my Instagram is Danny Go Public, right? I hope you guys learned something from here, and especially really something. I think if you don't see the numbers, you didn't even know that it will bring you for the past 1 year the installment that you paid. It just bring to the back like another back 1 year. So it's like you're paying your installments for nothing for the past 1 year, right? So hope you guys really benefit from this. And lastly, stay safe and stay home. All right. See you guys. I'm out. Bye.